Hi and welcome to the Market Alert for Friday, the 8th of September 2023. So headlines first, US stocks mostly declined as tech suffered from Apple's China woes, and stocks slide amid Apple woes while dollar and treasuries rise ahead of Fed speak. No economic news today, so the market will have to make its own direction. What have we got next week? Just as a quick look, see what we've got. Nothing on Monday. We must be getting close to CPI, CPI US next week. And what else have we got? No FOMC. And no, that's it. There's not a lot. So next week is going to be, the main event is going to be the CPI numbers from the US. Okay, let's have a look at the markets from yesterday. Kick off with the Dow. So once again, it was another down day, but the market managed to recover before the close. So you can see we've got an inside bar, fairly quiet. However, the market is below the averages at the moment and still pressured to the downside towards that 78 and 89 in the Dow. And in the 30-minute chart, we were up in the electronic and then down, and then up after the claimant count, and then sideways. The market currently showing a bit of weakness, trading back below yesterday's close. We've got support at the 50 EMA and the DP. They found the 50 EMA very useful a couple of hours ago and moved the market off this. We're going to need to see some buying to move back above the high, but I suspect we're going to see another down day today for these markets. And then say the daily chart is an inside bar for yesterday, and it's still got weakness on the downside there as well. In the German DAX, the market again sideways, went down, came back up, and overnight the market sitting on that 200 MA. Again, the market above that 15,700 as well. It needs to break that in order to move lower. In the 30-minute chart, this is your 15,700 level. I'm sure it is. Let me just double check that. Yeah, this red line is the 15,700. And again, you can see how this was used yesterday. We came down to the low of yesterday as well, and then we went straight off and we moved up to the high. So we covered the whole range yesterday from low to high. We then came back to the low once more. Then we had the claimant count news, and then the market drifted higher. At the moment, we're just about to break the DP. Maybe we're going to come down and have a look at the low of yesterday for the German DAX. In the S&P 500, we're down at the 62% retracement. We're actually with the averages as well at the moment. So a bit of support after Wednesday's sell-off there. 30 minutes, again, we still saw the sell-off after the news, but then the recovery. The market, again, sitting at the DP there, needs to hold above this level in order to move higher and attack yesterday's high. If not, then we've got the downside with the S1. And also the low of yesterday as well. In the FT 100, a green bar, the only market showing one at the moment, but price is starting to get into a sideways range there. And in the 30-minute chart, we moved higher from the start, but then we just traded sideways. Not much of an ab reaction to the US claimant at 130, the market sideways, above the DP at the moment, but about to trade below the 50 EMA. So market needs to hold at this level and also this green line where the last buying came in as well. US dollar continues to move higher. You can see this yesterday. It's down on the overnight, but it's not over yet on the upside. It'll continue to move higher going forward, which means that the metals are going to continue to move lower. You might get the odd bounce, but we're not done until we get down to $20 at least in this market. 89 is just down here, but below all of the averages. The averages are now switching to the downside as well. Like I say, $20 or lower is more likely where it's going to go. We've got that sideways range. It's not going to break out on the upside this time. It's going to break to the downside. We just need to take out this here, and then we continue much lower. 30-minute chart, again, the London fix and the claimant count. Overnight, we see the market moving higher. It's a good place to get short on this, as they tend to do this, pump it up in Asia, and then the market moves lower as soon as we get to that London fix by 1 p.m. there. In the gold market, holding well compared to silver, only a 50% retracement there. And in the 30-minute chart, you can see that we had a bit of a move to the downside and then back up overnight. Asian market above yesterday's high, which is more than can be said for silver. If we just have a look at that one, nowhere near getting the high out of yesterday, but gold already having done that. But again, Asian move, so again I'd expect that to move back to the downside. And finally, gold silver ratio, well, it's been vertical, hasn't it? It's going to continue as well as they crush the silver price once more, and they're going to continue to do this throughout the remainder of September. There's absolutely no reason to move the market higher, as the dollar at the moment is king. So unless the dollar moves down or recession is actually officially announced, then the dollar will continue to hold its strength. Just the best of a basket case of currencies. Simple as that. So we'll see going forward what happens. But at the moment, the market stuck in a sideways range and likely, for my money, to head back up into those 90 areas. Let me just squeeze this up and you'll see what I mean. We've got them over here, got all those areas there, so we'll take this out quite comfortably and then head up to these levels. Okay, that will do it for this one. We're heading into the weekend, so have a great weekend. Remember, there's no economic news today. The market's going to have to make its own direction. So with that, as ever, thanks for watching. See you in the next one.